What if a strategy so simple, so accessible, could unlock the path to millionaire status for you? It sounds audacious, almost too good to be true, yet it's grounded in financial principles that have forged fortunes for generations. We're talking about the $100 rule, a disciplined approach to investing that harnesses the market's consistent growth to transform modest monthly contributions into a seven-figure legacy. This isn't about get-rich-quick schemes, it's about patient, powerful wealth creation. Prepare to discover how investing just $100 a month can make you a millionaire, driven by an unwavering focus on compound interest, market consistency, and the sheer force of time. The $100 rule is elegantly simple: commit to investing $100 every single month, consistently, for the long term. This isn't a complex trading strategy or a high-risk venture. It's a foundational principle of wealth accumulation built on discipline and foresight. This monthly commitment, however small it may seem initially, acts as a powerful catalyst when coupled with the right investment vehicle and the relentless engine of compound interest. It democratizes investing, proving that substantial capital isn't a prerequisite for financial growth. Your journey to $1 million begins not with a large sum, but with a powerful, consistent decision. At the heart of the $100 rule lies compound interest, famously dubbed the eighth wonder of the world by Albert Einstein. It's the phenomenon where your earnings also start earning, creating an accelerating snowball effect. Your initial $100 earns returns, and then those returns earn returns, and so on. This isn't merely about adding money, it's about multiplying it exponentially over time. Every dollar you invest early becomes a worker, diligently generating more capital. Understanding this force is not just theoretical, it's the practical key to unlocking significant wealth from seemingly small beginnings. For our analysis, we'll anchor our projections to the historical performance of the S&P 500. This broad market index, representing 500 of the largest U.S. companies, has delivered remarkable long-term returns. While past performance doesn't guarantee future results, its historical average has been a powerful engine for wealth creation. Over several decades, the S&P 500 has averaged approximately a 10% annual return, including dividends. This consistent growth, weathering numerous economic cycles, is what makes it an ideal vehicle for the $100 rule. This long-term trend provides a robust foundation for our millionaire calculation. Why the S&P 500? Because it offers unparalleled diversification and consistent growth. Instead of picking individual stocks, which can be risky and time-consuming, you invest in an entire basket of leading American companies. This set-it-and-forget-it approach minimizes individual company risk while capitalizing on the overall health and innovation of the U.S. economy. You don't need to be a market guru, you just need to participate. Investing in an S&P 500 index fund or ETF is simple, low-cost, and aligns perfectly with the hands-off, long-term nature of the $100 rule. It allows you to focus on consistency, not complexity. Many aspiring investors get paralyzed by the fear of timing the market, trying to buy low and sell high. The $100 rule liberates you from this impossible task. Instead, it champions consistency. By investing $100 every month, you practice dollar-cost averaging. You buy more shares when prices are low and fewer when prices are high. This systematic approach smooths out market fluctuations, reducing your average cost per share over time. What truly matters is not when you invest, but that you invest regularly and without interruption. This steady commitment is far more powerful than any attempt to predict market movements. Time is your greatest ally in the $100 rule strategy. It's the critical ingredient that allows compound interest to perform its magic. Every year your money remains invested, it has another opportunity to grow, and those earnings have another opportunity to generate their own returns. The longer your investment horizon, the more profound the effect. Starting early, even with a small amount, gives your money decades to multiply, turning modest contributions into significant wealth. Delaying even a few years can cost you hundreds of thousands in potential gains, emphasizing the incredible power of an early start. Let's put the numbers into perspective. By consistently investing $100 every month into an S&P 500 index fund, assuming a conservative average annual return of 10% including dividends, your wealth trajectory looks astonishing. After just 10 years, you'll have accumulated over $20,000. Fast forward to 30 years, and that figure swells to over $227,000. And if you maintain this discipline for approximately 45 years, your dedicated $100 monthly contributions will culminate in a staggering seven-figure sum. This isn't theoretical, it's the proven power of patience and persistence. Imagine the impact of this financial security. One of the most empowering aspects of the $100 rule is its incredible accessibility. You don't need thousands of dollars to open an investment account. Many brokerages now allow you to start with very small amounts, offering fractional shares of ETFs or index funds. This means your $100 can immediately start working for you, buying small portions of the very companies that drive the S&P 500. This low barrier to entry shatters the misconception that investing is only for the wealthy. It's for anyone with the commitment to build a better financial future, starting right where they are today. The biggest hurdle to wealth creation is often inertia, the belief that $100 isn't enough to make a difference. This thinking is precisely what the $100 rule refutes. It's not about the initial size of the investment, it's about the consistent habit and the decades of compounding that follow. Think of it as planting a tiny acorn that grows into a mighty oak. The immediate impact might seem negligible, but its future potential is immense. Don't let the perceived smallness of the sum prevent you from starting a powerful financial journey. Small steps, consistently taken, pave the way for extraordinary outcomes. The difference between starting early versus delaying your investment is staggering. Imagine two individuals, one starts at age 25, investing $100 a month. The other waits until age 35 to begin, also investing $100 a month. By age 65, the person who started at 25 will have accumulated significantly more, despite investing the same monthly amount for only 10 more years. The early starter benefits from an additional decade of compound interest, allowing their money to grow exponentially longer. This comparison vividly demonstrates that time, more than any other factor, dictates your ultimate financial outcome. It's crucial to acknowledge that the market doesn't move in a perfectly straight line. There will be downturns, corrections, and periods of uncertainty. These moments can be unsettling, tempting investors to pull their money out. However, history repeatedly shows that staying the course through these volatile periods is paramount for long-term success. Market recoveries are a consistent feature, and those who remain invested benefit most. The $100 rule encourages a long-term perspective, reminding you that temporary fluctuations are merely blips on the decades-long journey to your millionaire goal. Trust in the market's historical resilience. Beyond the math, the $100 rule cultivates a powerful discipline of accumulation. It's a consistent habit that reinforces financial responsibility and patience. Each month, you're not just investing money, you're investing in your future self, committing to long-term goals over immediate gratification. This behavioral aspect is as critical as the financial mechanics. It teaches you to automate savings, live within your means, and prioritize your financial well-being. This ongoing commitment becomes a bedrock habit, empowering you to make smarter financial choices across all areas of your life. Starting your journey with the $100 rule is simpler than you might think. Here are practical steps you can take today. First, open a brokerage account with a reputable firm that offers low-cost S&P 500 index funds or ETFs. Next, automate your monthly $100 contribution, set it and forget it. Then, commit to a long-term mindset, resisting the urge to check your portfolio daily or react to market noise. Finally, consider increasing your contributions as your income grows, accelerating your path to millionaire status. These straightforward actions initiate a lifetime of financial growth. Reaching millionaire status with the $100 rule isn't just about a number in a bank account. It's about achieving true financial freedom. It means having the security to make choices that align with your values, rather than being dictated by monetary necessity. Imagine the options: early retirement, pursuing a passion project, providing for your family, or giving back to your community. This accumulated wealth provides a safety net, reduces stress, and opens up a world of possibilities previously out of reach. It's a testament to your patience, discipline, and belief in long-term vision. The wealth generated through the $100 rule extends beyond your personal financial freedom. It creates a lasting legacy. This can mean funding your children's education, providing a substantial inheritance, or even establishing philanthropic endeavors. You become a steward of wealth, capable of impacting future generations and causes you care deeply about. This simple, consistent habit transforms into a powerful instrument for generational wealth transfer and positive societal change. Your decision to start small today can echo through decades, creating a ripple effect of opportunity and stability for years to come. Ultimately, the $100 rule is a powerful reminder of the impact of your decisions. It underscores that financial success isn't reserved for the privileged or the lucky, it's within reach for anyone who makes a conscious choice to act. Your commitment, consistency, and belief in the market's long-term potential are the true drivers. You hold the power to change your financial trajectory, one $100 investment at a time. Don't underestimate the profound ripple effect of a single, well-informed decision made today. Your future self is waiting for you to begin. Imagine your future self, perhaps 45 years from now, looking back at the day you decided to embark on this journey. They're living with the security and freedom you meticulously built, $100 at a time. That future self will extend their deepest gratitude for your foresight, your discipline, and your unwavering commitment to a long-term vision. The sacrifices you make today are not losses, they are investments in a richer, more secure tomorrow. This isn't just about accumulating money, it's about building a life of intention and potential. Embrace the power of the $100 rule and invest in the person you aspire to become. The $100 rule is more than just an investment strategy, it's a philosophy of consistent action, patience, and belief in the exponential power of compounding. We've shown how investing just $100 a month into the S&P 500, leveraging its historical 10% average annual return, can realistically lead to millionaire status over a dedicated timeline. It emphasizes that time in the market trumps timing the market, and that consistency is far more potent than large, infrequent sums. Your journey to millionaire status isn't a distant dream, it's a tangible path that begins with one simple, consistent decision. Start today. If this deep dive into the $100 rule has ignited your financial imagination, then imagine what more we can explore together. This channel is dedicated to empowering you with actionable insights and practical strategies for building lasting wealth and achieving financial freedom. Don't let this knowledge be a fleeting thought. Take action, start your journey, and empower yourself with consistent progress. Make sure to hit that subscribe button, ring the notification bell, and join our community of proactive investors. Share your thoughts and questions in the comments below. Your financial future awaits.